Hi everyone. So in going over the ratio analysis lab, the first thing we really need to work on is understanding what's going on in terms of the accounts, right? So we have balance sheet accounts, we have equity accounts, and we have some sort of random accounts. So the first thing we want to do is so dividends, for example, would be in their own bucket, right? Now, retained earnings through minority interest, that would be known as equity, okay? So we're gonna bucket that. Okay, dividends are not there because they're usually on a statement of changes in shareholders' equity. So that's not our piece to worry about right now. These are the liabilities. Okay, the liabilities go from current debt to deferred taxes, and the assets go, let's see here, we have assets are starting with cash going over to other assets. So that's how we know what the assets are, and we can bucket them and stratify them, right? Now, these are all expenses, so to speak, right? So these are the expense accounts, and we can separate them as well so we know who they are. And then we have sales. We have one revenue account in this case, and that is basically called sales. And we're gonna bucket it right here. So now that's the one thing you want to understand first is what are these accounts, because we have to compute them, right? So that's when you want to go into here and just understand, how do I compute net income, right? It's your sales plus your expenses, because your expenses are negative, right? Then you have your net income computation. Total assets. This is how we compute ratios. First, we have to be basically familiar with the entire financial statements. So you have your assets, boom, you go from operating cash to other assets. You've captured all the assets on the balance sheet. Total liabilities. Again, we go from current debt to deferred taxes. We have control of the entire set of the liabilities. Now we have equity, and you're grabbing your equity. Be sure not to include deferred taxes or common dividends. That is not equity. Deferred taxes, this is considered a liability here, deferred tax liability. And common dividends, these are funds that have already been paid out of equity. They're out of equity, they're not in equity. So this is where we compute our equity, okay? And this is, once we grab our four accounts, now we can compute all of our various financial ratios.